everybody. Welcome to the weekly wrap-up here at Verified Investing. My name is Gareth Soloway, Chief Market Strategist, and we have a lot to cover. Number one, it was an insane week, right? I mean, we started the week with markets basically in crash mode. We then kind of had a little bit of a chop day on Tuesday. Wednesday, one of the biggest rallies in market history. Thursday, we saw a little bit of a pullback, and today we are rallying higher again, although not taking out Wednesday's high. I'm going to go over the charts, the data, the levels, the trades. We're going to take it all here at Verified Investing. Follow me over to the big board here. Let's take a look at what we have today. We have the Dow Jones Industrial Average up 700 points. Beautiful move there. The NASDAQ up about 310. So again, notice again, we're not seeing 10% gains, 8% gains. This is more in line with a normal rally day on Wall Street. Again, S&P 500 up 110 points or just over 2%. The kicker here, we're having oil rallying, but still below the key $65 to $66 level. And that's very key to watch. Watch that level. As long as we remain below 65, 66 a barrel, the oil trade is vulnerable and to me is bearish to the downside probability-wise. Gold today just continues to rip, guys. Gold is incredible. I will say it has a 3-bar surge, though. And 3-bar surge historically, if you look at this data point, you can see that most of the time, that's where a move ends in the short term. So for me, I did short some gold today. I'm planning to hold it into next week. I still expect maybe a gap up on Monday, but then I think we see a reversal. So we'll have to follow through on that. And then lastly, Bitcoin up about 5.5% or $4,300, trading back just underneath 84,000. The kicker here is there's the downsloping trend line, and I'll show you guys this in a minute, but we have broken above that, which opens the door maybe to getting back to 88, possibly even 92,000 on Bitcoin. All right, let's go to the charts here. This is the S&P right here. You can see again, here's your daily candle, so it is green. We are trading right now up about 1.8%. This area down here was the support level that I highlighted early in the week. And I said, guys, we have now hit a major technical support. This is where the markets could actually get a bounce. And did we bounce? Oh, yeah, we did. Now, the question is, do we head back down? Or do we continue to rally up? Now, based on chart analysis, we probably have a slight favoring to further upside before the markets start turning back down. Where would be our first level of resistance? Right here around 5,700 on the S&P is a gap fill. So that's the gap fill from the beginning of the collapse. And so what you're going to find here is we had a lot of buyers and sellers in this range, but the key is all the buyers that were buying here, they kind of got slammed, right? From here, it was like, oh, well, we're just going sideways. We think we're going to go back to all-time highs. Boom, to the downside. So what happens is, and this is why gap fills work so well in terms of being resistance, is if markets trade back into it, these people that bought over here are being made whole. They're getting their money back, and they're saying, you know what, that was so scary that I want to just exit the trade flat, and that's where you get a lot of the selling pressure at gap fills to be. So very interesting little tidbit there on the charts. All right, follow me back to the computer. Let's go through a few of these other charts. Let's flip back to the charts here and take a look. And if we look at the this is the S&P again, just want to show you where those two trend lines come from, right? I mean, this is the amazing thing about charts. The COVID low right here and the bull market high right there. Notice how those two trend lines guided me to say, okay, this is likely where we're going to see some support. In addition, we had other factors like the fear and greed index was down to 3 at this point, I mean, which is almost a historic low. A lot of signals, plus the VIX being above 45.50, that was a key signal as well that we were due for a bounce. The NASDAQ today, the QQQ up about 1.8% as well. This is going to be your first resistance up here. And remember, there's no guarantees we get there, but if we do, this is first resistance followed by second resistance. Now, the big factor, and this is something I've really harped on to you guys, this is the 10-year yield. Now, the 10-year yield, and let's go actually over to the big board. Let's go just dissect this because this is that important. So follow me back to the big board here. Now, just to reiterate how important this is, when the stock market is declining, okay, so here's the stock market going down like we saw late last week, early this week, okay? When that happens, the yields tend to go down as well. Why? Because people are running for the safety of treasuries, which is what we're looking at. We're looking at the interest rate on treasuries. So the more demand for treasuries there are, the more they can drop the amount of interest essentially being paid on those treasuries. Instead, this week, we saw yields going higher. That was a dislocation. That was a warning sign. And really, most smart economists and analysts and traders believe that this rally in the yield is what pushed Trump to back down and essentially say, hey, let's cancel the reciprocal tariffs on every other country but China. And that's one of the reasons why the market's got a bid. But the point being is that the bond market is in charge. Everyone thinks the Federal Reserve's in charge of interest rates. No, that's not true. The Fed controls the Fed funds rate, which is the lending rate with banks, which generally in a normal market will set interest rates up or down. But when there's a dislocation, the market sets the rates. Essentially, what I'm telling you is that if China wants to, if the rest of the world wants to dump our bonds, our treasuries on the open market, yields will continue to go up. And there's a lot of speculation. That's what was happening here. Is no one wanted to buy our new debt that we were selling this week, the 3s, the 10s, the 30s. And then also they were dumping to drive this up, to put pressure on the administration so that they would back down a little bit. And ultimately, that essentially happened. And we did hear today that India might be signing a deal in the very near future, a first trade deal of all of these other countries. All right, so again, the key is this. Watch yields next week. If yields go up, markets are going to go down. If yields pull back, markets should continue their rally to the upside. All right. This, again, for me, if there's one thing you're watching into next week that will guide you to where markets will be, it's going to be the 10-year yield or the interest rate on the 10-year. All right, guys. So again, just keep that in mind. It's so important. The next thing to also take note of here, if we flip back to the charts here, we can see this is the US dollar. And again, what happens in general historically is when there's panic globally, people run into the US dollar and buy dollars. The dollar should go up. What's happened to the dollar? It's going down. And this, again, is problematic. It tells you that maybe de-dollarization is starting to perk up again, where these other countries that are getting kind of targeted are now saying, listen, we got to kind of move away from the US dollar being the reserve currency. Now, listen, it's not at that point yet, so no one freak out about this, but it is just something that you have to think about. Again, unintended consequences of going after other countries. And listen, you could argue if it's needed or not, that's up for debate. My point is just saying that the dollar does not usually drop like this, and that's important to take note of. Okay? All right, so let's take a look here at the charts. And again, going through NVIDIA up a little bit here. One of the lines on NVIDIA I will be watching very closely is this one here. This would be an area where if we fall or if we rally up into it, which would be around 126 to 127, that would be a very good shortable level on NVIDIA. Apple, again, I was in this trade with members of Smart Money Stocks. Look at the level, perfect gap fill. Right? Perfect gap fill. Look at the bounce on Apple, trading back to 198 closing here today. I actually think Apple could rally as high potentially as 209, maybe even 224, but that would be quite the rally if we got that move. Bitcoin, we talked about Bitcoin. This is that line on Bitcoin right here, down sloping trend line. Look at, we're peaking above it. Now, it hasn't confirmed a breakout yet, but it is a good sign. And if the stock market rallies next week, then it would likely send us up to these highs right through here. See this area right here, and then this high. Notice it's all in alignment around 88,500. That would be first resistance. And then you have your 92,000 level right here. All right. Gold today. Look at this move on gold. It just continues to rally up. I did short gold today. So again, I am on the record as being short right up in this range here. That's fine. 3-bar surges generally mark the ends of runs, or at least a pullback in the near term. My downside target would be back to about $3,000. We'll have to see again what it does on Monday. Oil today. Let's take a look at oil here real quick. If we look at oil, small bounce, nothing to write home about here though. Again, still below that key level of 66 to 65. And then natural gas, if we flip over to nat gas, you can see it basically did nothing. Remember, I'm no longer in my short on nat gas, got out right over here. It went a little lower, touched this line, and it stabilized, and that's fine as well. All right, let's come back to the main camera here. Let's focus in. So again, what we're seeing here is that the markets are kind of in this tenuous period of saying, okay, are we going to get trade deals? And I think that could be enough. If we get some announcements of some trade deals over the next couple days, that could be enough to push the markets up in the near term. So that's the positive catalyst. The negative catalyst of why eventually I think the markets are going to collapse much, much lower is the amount of damage done to the economy. You basically caused the economy to come to a standstill. You had the reverse wealth effect with the stock market dropping essentially $20% in a week. We then saw a lot of other factors like consumer spending falling off a cliff, all of these other things, and it's brought the economy to a standstill. Now, listen, if we start to rally up, could it be starting to percolate a little bit? Sure. But the problem is, again, there's a lot of kind of question marks, and people are going to be very uncertain. Like, are these deals in place? What's the next shoe to drop? What happens here? What about the economy? What about unemployment? How do these impact these tariffs that are going to stay? How do they impact the market? All of these factors, guys. So ultimately, I expect the markets to basically rally a little bit more and then start their next leg lower. I do think we take out the recent lows and we have another leg down. I'll be here trading it and helping you guys hopefully make some money. You guys have a great weekend. Thank you for supporting us here at Verified Investing. Now go enjoy. Take care.